So the only thing to me that could take us to a new low so that this guy could actually buy under 50, which I feel bad for him. I don't think it's going to happen. I should have said flip it. I mean, I don't think it's going to happen. Is if we don't get a peace plan, which I think we're going to get one sometime, not until, Trump puts on some calls. Regulatory capture has never been for us, for the people. It's just not, right? It's for the few. And again, it is why, if you look at the number of regulations since, 1900, and you look at the number of, lobbyists, both are straight lines up. And the other thing that's straight line up is income inequality and wealth inequality. So we have the largest gap between the haves and the have-nots in history.
What if everything you thought you knew about Bitcoin's bottom was wrong? What if the real threat to crypto isn't a bear market, but the debt-fueled time bomb ticking inside traditional stock markets right now? Today, we're breaking down one of the most compelling macro arguments for Bitcoin you'll hear this year, straight from veteran investor Mark Yusko, a man who has navigated more market cycles than most of us have had hot meals. We're talking margin calls, monetary inflation, GDP illusions, and the uncomfortable truth about who actually benefits when money gets printed at scale. Stay with me, because whether you hold Bitcoin, stocks, or nothing at all, this conversation affects your financial future. Let's get into it. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
And next we are going to talk about margin calls. Because I don't use debt, because you've ranted about this. Like, why would anyone buy an 80 vol asset with debt, with leverage? It doesn't make sense. If you want to avoid getting margin calls, then don't do that. Now, you want to borrow against STRC or something and lever it up one time. Yeah, that's fine. There's basically no vol, but borrowing against, stocks. And so I saw in the comment, when you announced that I was coming on this morning, some people said, hey, I'll be there. Another person said, no, I sold all my Bitcoin and I'm going to buy it back in the summer under 50. And I almost replied, well, no, you're not, because we're not. But here's the thing. I don't claim to have any particular knowledge, but here's the thing. We are in crypto winter. We're about halfway through. I think it ends in September, October. But I actually am willing to say that absent an unraveling of margin, which I'll come back to in a second, we have seen the bottom. That 63 print and the 59 touch intraday was the bottom. Now, why do I say it? Well, if you look at the Metcalfe Law value, Tim Peterson, has this great model that kind of tells us the value of the Bitcoin blockchain network. And that was starting to dip sub 80,000 because of a bunch of factors. Part of it was the shutdown of the hash rate. Part of it was the war and uncertainty. Long story short, it got there, and we got pretty well below it at 60. And so if that kept going down, the impetus for investors, remember, investors are my favorite one of the four participants in markets. There are investors, there are traders, there are speculators and hedgers, and there are gamblers. The problem is the gamblers cause the pain because they lever up and then they get the margin calls. That's happening in the traditional markets right now, right? We've got these parabolic moves, like literally almost going back in time in semiconductors and chips. And we've got valuations that make no sense. And we've got the highest level of margin debt in history. As a percentage, it's not the highest, but it is in terms of total dollars. So the only thing to me that could take us to a new low so that this guy could actually buy under 50, which I feel bad for him. I don't think it's going to happen. I should have said flip it. I mean, I don't think it's going to happen. Is if we don't get a peace plan, which I think we're going to get one sometime, not until Trump puts on some calls. If we don't get that. And this skirmish takes a funky turn, whatever that turn is. And if the disruption in the oil markets and the fertilizer markets and the helium market suddenly gets so acute that the GDP numbers, remember in Q4 when they promised us we were going to have 5% GDP because we're going to have this productivity miracle because
we're going to grow our way right out of that, baby.
We're going to grow it, right? And the first estimate was 5%. And then, no, I'm sorry, not the first estimate. The GDP now was 5%. But then the first estimate came in at like 3.4. Like, oh, it's close. Yeah, 3.4 is close. And then the second estimate came in at like 1.7. And then the final estimate came in at like 1.4. So we were sub 2% again last year. Shocking, I know. But nominal GDP growth is working age population growth plus productivity. Working age population growth is sub 1%, is going to be sub 1% for the next 20 years. And there's nothing we can do about it. And productivity is sub 1%. And AI doesn't improve productivity the way we measure productivity. It may make you faster cleaning up your inbox, like that woman at Meta who said, hey, fix my email. And said, I'm going to delete your inbox. She said, no, don't do that. She's like, I'm going to do it anyway. So you could fix it that way. But all of this says we're not going to grow our way out. And so if GDP starts to tank because of the disruption in global oil and particularly helium, and we get like the lockdown knock-on supply chain effects, that could trigger a market drop. And if we get a market drop and an unwinding of leverage in stocks, Bitcoin will fall. Not because Bitcoin should fall, but because when you get a margin call, you don't get to sell what just fell. Like, people who own the trade desk, and I don't even know what the trade desk does actually, but the trade desk, right? It went down 40% yesterday. So if it's down 40% and you owe somebody money, you can't sell that asset to pay. So you have to sell what didn't go down: gold, bonds, cash, Bitcoin.
Money supply is growing. In the United States, it's expanding at roughly 8% per year. That's an 8% annual tailwind for any hard asset: Bitcoin, gold, platinum. But the real story is China, where money supply is growing at 17%. Global monetary expansion at that scale doesn't show up in your portfolio overnight. It's the frog in boiling water, slow, invisible, until suddenly everything costs more and you can't figure out when it happened. $7 gas in California, €10 equivalent petrol in Italy. These aren't anomalies. They're the visible tip of a monetary iceberg. And Bitcoin, by design, is one of the few assets in the world with a hard cap on supply. While central banks print, Bitcoin's issuance schedule doesn't flinch. That asymmetry is the thesis.
That's the only thing I can see that would take BTC off of its track. Like, I didn't wear my roller coaster socks today, but I wear Bitcoin socks every day. I get them from my friends at Mount Socks. I love that name, by the way. It's like one of the greatest names of a company ever. But Mount Socks sends me this bunch of socks, and I have these roller coaster ones, and I wear them pretty frequently because we are
coin,
coaster, right? And but part of the roller coaster ride, remember, is when you lock in the track and you go up the hill. We're kind of in that right now, and I'm not saying we're going up forever, and we will have more whoop-de-doos, but I do think the relentless money printing, and it's not so much the US. The US money supply is growing 8-ish%. Great. That's an 8% tailwind to Bitcoin, gold, platinum, whatever. But where the real growth has happened is China. China's growing their money supply at 17%. And, people don't really appreciate the impact of global monetary surges. I mean, they do in the sense that they see things getting more expensive, right? We've all seen the pictures of, there was the 7-Eleven out in California with gas, 7-Eleven, right? $7.11 for a gallon of gas. A buddy of mine is in Italy. I guess everyone's in Italy. In fact, I'm going to Italy for my 40th anniversary. But he's in Lake Como, and he said he paid $10 euro equivalent for a gallon of gas the other day. So, or petrol, I guess. But you do see it that way. But it's that boiling a frog thing. It's slow and steady, and you don't really feel it until you realize you really can't afford anything. The craziest part of it is what it does to income and wealth inequality, which is partly why Ms. Warren is on the take of the banksters, right? The banksters really like $300 million a day of free money. I mean, think about that. That's a lot of money to make for doing nothing. Like literally, people deposit their money, they give it to the bank. The bank says, okay, thank you. It's my money now. And I'll give you a token of appreciation, 50 basis points, 75 basis points. And then I'm going to lend it out. I'm going to rehypothecate it at 5, 6, 7%. Those NIMs, those net interest margins are about as high as they've ever been. And that is a great business.
And then loan it again. And then loan it again. And then loan it again.
And loan it again. Yeah, 9 times. Yeah, exactly. And look, I'm actually not, I love fractional reserve banking. I know people hate it when I say that. I actually do. I think fractional reserve banking created the prosperity that we all love. And I say it all the time. Name a country with no fractional reserve banking system that you would live in. I'll wait, right? Can't do it. So I think that the problem is the stablecoin companies are like, well, we could actually pay yield on depositors, and we could still make a nice spread. We can make a maybe 2% spread, or and we'll pay people 4 or 5%, and are held to the no. So I get it. Now I think the thing that's disappointed me most, and this actually is pretty disappointing. I used to think, and I shouldn't name names, but I will. I just think Brian Armstrong was a champion of us, right? I thought he was fighting the good fight to try to get stablecoins to pay yield, and it turns out
he's right there. He can hear you.
I know, but he's not. He likes being told that he has to have high net interest margins, so I don't have to pay my depositors anything.
Now let's talk about something Yusko is genuinely angry about, and rightfully so. The banking system, as currently structured, is engineered to transfer wealth upward. Banks take your deposits, pay you 50 to 75 basis points in interest, and lend that money out at 5, 6, 7%, sometimes rehypothecating the same capital 9 times over. Net interest margins are near historic highs. It's a phenomenal business. If you're the bank, if you're the depositor, you're subsidizing someone else's profit.
Regulatory capture has never been for us, for the people. It's just not, right? It's for the few. And again, it is why, if you look at the number of regulations since 1900, and you look at the number of lobbyists, both are straight lines up. And the other thing that's straight line up is income inequality and wealth inequality. So we have the largest gap between the haves and the have-nots in history. And look, 2020 was the largest transfer of wealth from the masses to the rich in history. Trillions and trillions of dollars engineered by a fake scamdemic, right? But this new set of IPOs is going to be worse.
Oh my God.
This
I'm so worried about this.
valuation of AI companies that aren't intelligent in any way, shape, or form. I mean, they're good tools, but they're not intelligent, and we're not on the brink of AGI. And it's very disconcerting to see how much money is going to be transferred from the poor to the rich. Scott, it's going to be, again, trillions of dollars.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.